This is my daily market recap. Today is Thursday, July 17th. I just smashed a TP on the Nasdaq 100 using a sniper entry. Let me walk you through it step by step. From the daily time frame, my bias was neutral because price had already taken a major buy-side liquidity after tapping an all-time high and was reacting to a previously formed fair value gap. On the 4-hour time frame, I saw that the market formed a new weak opening gap and took minor sell-side liquidity. Then it pushed up to take buy-side liquidity, forming a fair value gap on the way. It retraced back to the new week opening gap, showing a long wick. This aligned with what ICT teaches, like the wick makes the damage, the body tells the story. So I expected price to revisit that buy-side liquidity area again. On the 1-hour time frame, things became even clearer. The market cleaned minor sell-side liquidity and traded back into the new week opening gap with a long wick. There was a visible buy-side liquidity pool resting above. A fair value gap formed during the open of today's session. That's when I started looking for a trade setup. Entry setup, I drew my optimal trade entry, OTE, from today's market open to the London session high. The 62% retracement of the OTE landed perfectly at the midpoint of the fair value gap that formed after NY open. That was my entry level. Trade details, I placed a buy limit order right at that level. Stop loss was just below the fair value gap. Take profit was set at the visible buy side liquidity above. I used a 1% risk on the trade. The setup was based on the fair value gap plus OTE concept, classic ICT model. The market came down with perfect precision, tagged my entry exactly. It was a sniper entry. Price then ripped with high volatility, never looked back and smashed my TP. The whole move aligned with the narrative I built from higher time frames. My neutral bias was spot on. It helped me remain flexible and responsive. The OTE plus FVG combo continues to prove extremely reliable, especially around news-driven volatility. ICT's narrative of the wick and body played out beautifully. The higher time frame alignment gave me the conviction to hold the trade with confidence. This trade exemplifies the power of preparation and understanding, market dynamics reinforcing the importance of strategy and trading success. With every successful trade, I remind myself that patience and discipline are key, setting the foundation for continual growth in my trading journey. Right now, the market has cleared that buy-side liquidity and we're sitting near an exhaustion point. If another fair value gap forms near this level, we might see a reaction, possibly a reversal or continuation. I'll be watching for either a new FVG or a liquidity sweep in the next session. Stay tuned. In the next video, I'll break down the exact chart setup with visuals and go deeper into the strategy explanation, from the higher time frame bias to the exact entry model and execution. If you found value in this recap, don't forget to like, comment, and subscribe.